Hello and happy Friday. This is Jonathan Hoover. I am back for another portfolio analysis. So just a reminder, I'm making these videos to track my performance while I'm trading options in the stock market. And the goal is to basically just increase my efficiency, become more aware of my portfolio, my trading tendencies, and you guys can follow along while I'm learning all of this. So, plan for this video, we're going to break down my portfolio's performance this week. And let's get started first with these little snapshots right here. So as you guys can see, I've actually almost doubled my P&L year to date, which is pretty fantastic. Also, you can see I doubled the net leg. The net leg went from 62.06 to 64.11. Now, I started the year with just under 6,000 in my account. And so if you're wondering why I don't have 6,600, that's actually because this P&L does not include commissions. The cost of trading, just because I'm putting on so many different positions and adjusting them and everything, is actually, I've spent, about $200 in commissions so far this year. So commissions are a real thing if you're trading in an IRA. The reason being because you can't trade uncovered positions in an IRA, so you have to pay twice what you'd be paying in commissions. Actually, a little bit more than twice. Just because of the limitations that the government has on margin in IRA accounts, or rather the lack thereof margin in IRA accounts. My margin account has much lower commissions. However, my margin account actually is down almost 60 bucks actually. Yeah, so we're down 60 bucks in the margin account. Still making money, but all the positions in the margin account dropped a little bit. There's only 3 in there. And part of the reason my margin account isn't performing as well is because I don't have as much diversification in there. So only 3 positions, and all of them are strangles, which are pretty sensitive to big moves in the underlying stock. So I'm actually getting ready to roll those positions out, though. I've got pretty good IV, and I'm not really that concerned about the margin account at the moment. More interesting to me, I'm much more active in the trading with my IRA, as you can see here. So we've got 17 trades today and 15 trades last Friday. Let's actually get right down into the portfolio itself. So I'll go back to here. So this is the actual portfolio. I just wanted you guys to be able to see the net leg, and when I'm in privacy mode recording on this, so it covers my account numbers, but it also covers the net liquidity. Today I didn't actually make very much. Most of my earnings came earlier in the week in the form of earnings trades actually. So I did very well on earnings trades. I traded earnings on IBM, United Airlines, SWKS, whatever this guy is. What is this? Skyworks Solutions. I don't even know what they do, but I traded earnings on them because they were liquid and made 55 bucks on them today, so that's nice. Let's see, American Express, which actually I'm losing on, so I'm losing 75 bucks today. It says P&L open 118 or negative 118, but I actually adjusted this position, so if we come in here, you can see I've only placed an earnings traded on them this year, so I'm actually only down 75 bucks. So that's not that bad. Other earnings I did, Texas Instruments, Procter & Gamble, Netflix. So I made money in all of them, all my earnings trades, except for American Express, which is actually really good. So those earnings accounted for about $248 of my profits this week. So I've got about 60, what am I, 676? So so I made about $50 to $60 in the rest of my portfolio's performance. So really those earnings are the lion's share of my profits this week. Hence the reason why I'm up 300 bucks in a week. That is unusual for a portfolio of this size. The only reason I can do that is just because of those earnings trades. And you might be wondering, so how exactly are you trading these earnings? Well, if we come into, let's see, upcoming earnings. So let's look at how we trade some of these earnings, and I'll just kind of break down my thought process for them. So let's see, what's I don't recognize any of these guys. Oh, here we go, Apple. They got earnings coming up on the 28th. That'll be good. So an earnings trade, it's actually pretty simple. What I'm trading is the volatility that is building up before the earnings. If you guys come over here, you can see that the IV index is 42.5%. They're expecting the stock to move that much by the end of today. So let's go here. So 45.3% for this option, which expires after the earnings have been announced. So the earnings is on the 28th, and this expires on the 31st, so there'd be 3 days remaining. And if we come in and actually look at it, so these are the 302.5 puts and 335 calls. So they're expecting that the stock will remain within this orange area after this has expired. So but within 7 days, they're expecting Apple to move. So 317.5, so that's a $15 move. So they're expecting a roughly 317.5 to 335. That's 318. So that's like a $17 up move, or a 318 to the $15.50 down move. So they're actually expecting it to move a little bit higher than they are expecting it to drop. That's their expected move for after earnings. Now, if Apple stays within this range, and if I sell, let me define my risk here. There we go. So if Apple stays within these things, I'm risking $317 here. My max profit's going to be $183. I'm collecting $1.83 per share. My delta is basically neutral. I've got 0.21 deltas, so basically neutral position. So I want Apple stock to stay within this range. This is almost a $32.50 range. And so if after earnings, let's say Apple goes up $5, boom, $5 would be, in this range and stuff. These options suddenly become almost worthless because they're still out of the money, and I pocket most of this trade right here. Generally speaking, I just aim to make about half of that, so I'd make about $91, $92. So I'd actually probably be able to close this for $180. Yeah, so I'd pocket about $90, and I walk away at the end of the day. So hopefully that's how it works. Now with my American Express position, let's see. Oh, I actually lost money on this trade, and as you can see, so I've got this call position right here. My original trade sold an iron condor, the 121, 126 puts. So 126 and 121. There we go. Cool. So this is the position I had on originally for, and that would be 94. I sold it for 88.1, or no, 84 cents. Yeah, there you go. I sold it for 84 cents, and as you can see, the stock after earnings moved directly to my strikes right here. And so it moved so far so fast, this became more valuable than, this became more valuable than what I sold it for. And so I assumed a loss right there. It actually moved a lot more earlier. So if we look at the, here we go, here we got the chart. So it moved a lot more earlier. If we zoom in here, you can see it spiked up. So it opened way up and then it dropped. So that is why I'm down money in this American Express. I actually would have almost scratched it, except on the opening I wasn't sure if American Express was just going to take off and suddenly like make $1 bajillion or something. I don't know. So what I did to hedge my position, I closed these puts right here, which as you can see they're closed. I got zeros next to them. So I closed these positions and I rolled up to make, how much did I make? I collected another 88 cents on that. And so that just reduces my overall at risk money, because I had a little over $412 at risk in this trade, and I don't want to lose $412. And so now I've reduced my risk, so I'm only risking about 360. Well, actually, it's like 350 is what I'm risking now. So yeah, so I've got 350 at risk. That's the most I can lose. It's all capped out, and I'm hoping that I can close this for 160. And at 160, I should break even, more or less, on the trade. So we'll see. I don't actually expect to break even, but you never know. Stranger things have happened. Anyways, so yeah, so that's my week in earnings, and that's how I do earnings trades. You know, we've had some interesting news that's really spooked the market, in that we've got this Chinese coronavirus, and I haven't looked into it too much, just a little bit, and they've confirmed 2 cases in the United States, which has sparked off this market sell-off right here, which I'm actually pretty well positioned right now for this sell-off. I've got negative 21 deltas, which is fantastic, and I've got 42 theta, which is comfortable. That's actually exactly twice what I want for my portfolio. 1 to 2 delta theta ratio. So I am perfectly alright with this sell-off. Adds a little bit of volatility to the market. I'm taking advantage of that both in the Dow Jones. So I've got an iron condor trading in the Dow Jones. So right here, as you can see, as long as it stays within, and this is actually $5, so it's $5 of risk on each side. I collected 168, so I'm actually only risking about 332 on each side, so I can only lose in one direction. Anyways, so as long as the Dow Jones stays within this range, I'm going to start making money on this iron condor, and I'll adjust it to balance my deltas and reduce risk as the market fluctuates. But the IV rank jumped up to 30%. Actually, it was 32 actually when I put this trade on. So now it's at 30%. So IV is already starting to come in. And I'm going to leave this trade on until it drops below 20%, and I'll start considering taking it off. I haven't seen IV this high in the Dow Jones in a while, so that's actually pretty nice. It's kind of sad that a 30 IV is what I consider high IV, but it is what it is. Usually I prefer IV to be in the like 40s or 50s when I'm trading it. But in the indexes, it's been like very like pulling teeth, really. So, and then I also sold an iron condor. Oh, did I? I thought I sold an iron condor in here. Oh, yes, it was NASDAQ. I sold an iron condor in NASDAQ because an IV, wow, it dropped a little bit. So the IV was also at about 30 in the NASDAQ. IV's already dropping. That is, well, it's good for my trade. So yeah, so here we've got, this is the iron condor I sold. Let's go to the trade page. You can see it right there. So yeah, so again, wow. Okay, so IV's already dropping. So this should, what did I sell it for? 157, it's 156. So I haven't made any money on it yet. As you can see here, I've got these 2 iron condors I positioned. I don't usually do iron condors unless the IV starts to get high. Those are a high volatility trade. They make money when the stock stays within that range. So pretty good, I'm pretty happy about that. Most of my trades are calendars. I've been losing money in IWM all year, but a couple of my trades came in, and so I took them off, put new ones on. Those are just adjusted a call calendar and a put calendar. Actually, this call calendar was a complete loser. I just closed it. Let's see. IWM. Yeah, so this was my call calendar. Oh, no, that's a put that made money. Where's my call? Yeah, so there's the call. This was an opening trade, though. Did I? Oh, yeah, here we go. So this is the call I closed for a loss. So lost 50. Well, sold it for 50 cents. I probably, if I'm gonna guess, I probably put that on for, no, those are puts. I probably put that on for probably about $1. So I probably lost 50 cents on it. And if we go in and we look at my IWM earnings for the year, I'm just losing money hand over fist in IWM. So that's kind of annoying. But I've made money in most everything else. There's just these trades. CGC down slightly a little bit there. So I'm also losing money on CGC. And Delta Airlines. Oh, I forgot about Delta. I lost $7 in Delta. That was an earnings trade. DAL, I'm pretty sure that's Delta. Yeah. Yep. Anyways, I lost money in Delta too. Let's take a quick look at my margin portfolio. So that was all my IRA. IRA is doing fine. We're perfectly balanced. We're ready if the market goes down. The only problem is I had 2 day trades, which that happened today. So last week I had 1 day trade, an accident on my part. The market moved really quick and I didn't expect it to. And again, my fault on these day trades. I put in a SPY. What was it? That was IBM and SPY actually. Sorry. Go back to this portfolio. So IBM, this was a day trade. Big accident. Did not mean for that to happen. And then SPY. This right here was another day trade. I put on a put debit spread. Let's just show you real quick. Oh, clear this. Yeah, so I put in a put debit spread right here, and this position adds -12 delta, and I put that on for the negative delta specifically because I saw the market was dropping. I was losing my negative deltas pretty quickly, and so I needed to add negative delta in a hurry, so I put this guy on. I've actually got a better than 50% chance of making money on this trade, which is really nice. And I got positive theta on it, which is also pretty nice. So as long as the trade stays above, or I mean below 330.5, I should actually make money in this position. And I'm actually only trying to make $2.40 on this. Put it on for 206, so trying to pocket about 34 cents. Yeah, 34 cents per share, or $34. Yeah, so that's the first one I put on came off because of the market scare. Everyone freaked out about this coronavirus, and the market tanked much faster than I expected. And when I woke up, lo and behold, I had 2 day trades. So, okay, so back to the margin portfolio, which is losing. So as you can see here, I have actually adjusted every single one of these trades today to reduce my delta risk. Right now I actually have 1 delta, which is not bad. I'd rather that be negative, but it is what it is. And 9 theta. So 9 theta is okay. It's good for this side, the size of this portfolio. This is about $2,000. It's like 2,050 something. So I'm just spinning my wheels right now because these are all, they're all right at my strike prices. So I had to roll this down. As you can see, it's been down over the last week. That big move right there is where I started really hurting, and then it's kind of flattened out a little bit here. So it keeps messing with me. It's like going up and then comes back down, going up, come back down, going up, come back down. So it's been doing that all week, and so I just moved this down to reduce my risk to the downside and neutralize my deltas. And this was at the 17, I think. Let's see. Oh no, it was actually I had the 18, so I closed that and rolled it down to the 16 to neutralize my deltas. And this only has 28 days left. So at the 21 day mark, so basically next Friday, I'm going to be rolling this out to the March. So yeah, I'll be rolling it out to March. So March will have about 45 days. So I'll roll this out. I'll reestablish. I'm just going to be basically selling the 13 and the 18. Collect another buck. That'll reduce my buying power to 460.55. What's my buying power right now? Right now. What is my buying power? Here we go, cap requirements. Yeah, so right now that trade.cc, that's holding $700 of capital. Like, that's my collateral, basically, that I have to set aside. Initially, it was holding 936, which is crazy. Anyway, so that'll reduce my buying power requirement to 400 something, and that'll free up $300 of cash, which is going to be fantastic. So that'll be good. And then 335. So actually these ones are barely holding up anything, which is most of my money's tied up in CC right now. So same thing with M. So if we look at M, that's what? That's Macy's. So they actually have earnings coming up. Ooh, do all three of these have earnings? Oh, yeah, they all have earnings coming up pretty soon. That'll be interesting. Because I want to roll these out. They have really good IV, but their IV, they have IV because, wow, earnings is in a week for this guy. So earnings is basically on Thursday of next week. That's kind of annoying. I don't know that I want to hold this through earnings. Well, so if this position moves in my favor, I'll close it and then reestablish an earnings trade before earnings because I like the IV rank. And US Steel is pretty liquid stock. There's only a 2-cent difference between each. So I really like this. I should be able to just keep collecting credit and over time make some money. And actually, I mean, I'm still making a tiny bit of money. The commissions are much lower. As you can see, I've spent $8 in commissions, so $10 actually if you count the fees. Whereas if we were to go over here, I've already spent 186 versus 51, so that's 235, 237, yeah, $237 in commissions. So yeah, commissions and fees eat up your profits if you're not trading efficiently. I'm working really hard not to overtrade, but given the tiny size of my account, it's difficult. This week was actually a very, very profitable week for me thanks to those earnings trades. And thank you very much for tuning in, and sorry this took so long. I did not realize how long it would take to go through my portfolio. I tried to hurry it up and talk a little bit faster, but I'll keep practicing and keep getting these videos more and more efficient to the point where hopefully I can increase the quality of the videos over time. Anyway, thank you very much for tuning in and have a wonderful weekend, guys. Thank you very much. Jonathan Hoover, over and out.